Brian Scott-Smith reporting from the United Nations, site of Day 3 of the IIS Global Insurance Forum. Today we heard offers of collaboration from the UN Secretary-General, the World Health Organization, regulators and insurance industry leaders. The question for the industry: how can it usher its energy and tremendous resources to benefit society while also catering to policyholders and shareholders? One answer may lie in a new approach to investment strategies. We spoke with ICMIF Chief Executive Shaun Tarbuck about a new initiative called the Smart Risk Investing Framework. It's a bold effort that could have a major impact far beyond the insurance industry. See what you think.
So the need for insurance sector to be involved in investments and resilience, I think is absolutely vital at this stage. We've heard this year is the big year. It's 2015 where we have all the global agreements. We've got the Sendai Agreement already, which has actually built or encoded all the resilience that we need. Those are codes that we should be using in our underwriting side, but now what we're saying is we need to use those also in our asset side, because for instance, if we had buildings or investments in certain areas where we don't really think they should be, why are we actually investing in those? In fact, you could even take it to the next stage and say, well, why are we actually insuring them? Surely the codes that are coming out of these global agreements, the Sendai one, the SDGs, the COP21 at the end of the year, surely those should inform our business decisions around the investments as well as the liability side of our balance sheets. Now, I think this is a huge opportunity for us as a sector to show leadership. I think what I've just announced here at the UN about this Smart Risk Investing Framework gives us a huge opportunity to take everything that we know about the modelled world and actually apply it to our asset side. And if we can really start to change the behaviours of our asset pickers and get them to talk to our underwriters, I think that will be a sea change for the industry and will create a lot of opportunities, particularly those for the early adopters of it. We've talked about doing it, we talked about asset liability management in the past, but this isn't that. This is really more and more about making sure all the 35 trillion that we've got invested as an industry, making sure that there's an opportunity there that we are seizing to make sure that we build a resilient world. Because at the end of the day, there are two organisations that pay for any natural disasters. It's us, the insurance industry, and it's governments. And governments are crying out and saying, we can't do it anymore, we haven't got enough money. So we have the assets there, but if we make sure those assets are better invested, more wisely invested, under the codes we apply to the underwriting side, then that's got to be a brilliant business opportunity for us. What we've done initially is we're just asking members of my organisation, ICMIF, and members of the IIS to self-assess where they think their smart risk investing currently sits in all of the asset classes they actually have. So that comes down to the equities, the bonds, the property portfolios and anything else they may have in their asset portfolios. And self-assess where you actually think, given what we know that's out there, like the UNEP PSI, the PRI, assess where you think your current investments are. And it was the shock that I realised sort of nearly a year ago that it was less than 0.1% of the total investable assets of the insurance sector, i.e. 42 billion, that's all we had actually invested in this particular area. So I thought, well, surely we can do an awful lot better than that. And this is where I think we can easily double it, which is the commitment. And then I think we can increase that by tenfold by 2020. Now, the initial indications, which I've just announced today, is that out of just merely 13 of the ICMIF members, the mutual sector, we've already got 41 billion of assets in smart risk investing. So we've already hit the previous target of 2012. And when the stock company ones that are very engaged in this, the Avivas, the AXAs, the Swiss Re's, then when they start to come in with their numbers, I think we're easily going to see the doubling. And that really is the start of the conversation. That's when we start to change behaviours, to start to really hit on the smart risk investing. We have a task force being set up, which will be the great and the good of the investment and underwriting side of our industry, and the UN and some of our newfound friends, the partners that we have in the other investable world in the banking and the investment side. So that group, we've got BlackRock, we've got Bank of America, And then my big members, the Cooperators, the Volksams, the Desjardins, and then hopefully also on the AXAs, the Alliances and Avivas and Swiss Re's of the world. So it's basically all the movers and shakers that are actually working in this area. They'll be part of the task force. They'll be then driving the definition and the framework forward, which we then hope to launch at our conference in Minneapolis in October. That then gives us credibility for Ban Ki-moon then to announce it at the COP21 in December. I hope he's one announced it. He certainly mentioned it today as being a crucial initiative from the sector. In fact, he mentioned it and a couple of the other UN people mentioned it. So we know it's grabbing the attention of the UN policymakers. So I think at least we can do is make sure that Ban Ki-moon's got something to really shout about and mention insurance when COP21 comes along. But that is the beginning of the road. Really there we need to scale it up and see, well, what is it we really mean by smart risk investing? And it's having that conversation and bringing the right people around the table I think will drive the sector forward. This isn't another green initiative. This is actually a business reason for doing this because it supports our sustainable growth. And I mean sustainable growth as in our industries and our businesses growing and increasing the amount of business that we can write and increasing the market penetration in all countries, not just the emerging markets we're talking about, because we're all whinging and complaining that there's not enough pie to go around and we're all fighting each other. Well, here's a great opportunity to actually increase the pie and increase the relevance of insurance and actually make it relevant to the people in the street, the customers. They are looking out for, as we heard in some of the presentations, they're looking out for organizations that are sustainable and growing sustainably and playing their role as good corporate citizens. And I think that's the role that the leaders in this particular initiative will gain a huge momentum and probably more market share in the new areas of insurance and risk pooling that we're going to be pulling together as a result of this.
For more of our coverage of the Global Insurance Forum from New York, visit the RIN TV On Demand Library.